talk about a filter to consider. And that is going to be Boomerang filters. I mean, really, the key one to me is the angle of the Bollinger Band. Now, what you would expect one, higher winning percentage. Two, fewer trades. So with all of our testing, we've found that the winning percentage is going to increase with the steeper the slope in an uptrend or a downtrend. But there comes a point where if you rely so much on that slope, you're going to have very few trades. So you have to find a comfort zone for you when you're applying this filter. And we've looked at creating we've been able to test based on a very black and white entry signal using the Bollinger Band. But I'll be honest, it's almost easiest to evaluate and interpret the upper and the lower Bollinger Band, and to get comfortable with a visual signal, what's best for you. And you could be a little discretionary here with the signal. I think that's easier because you start to see a setup or a scenario that, based on your experience, is comfortable for you, rather than trying to analyze the slope by taking the difference between the Bollinger Band. You know, like saying, well, if the Bollinger Band is 2 ticks lower than the previous bar. Making it too complex, I think it becomes very difficult to trade real time. But the truth is, as we were testing things, the steeper the slope, the higher the winning percentage. But you run into a problem where there comes a point, if you wait for the steepest slope period, you're not going to have many trades. You want to find out what's most comfortable for you based on your testing and based on your experiences. Now, what do I mean by the angle of the slope? Well, if we look at this move, this happened pre-market, but you see that the lower Bollinger Band here, when the trend really started, that the lower Bollinger Band slope is angling down at a 45-degree angle or lower. So that's a pretty nice slope, and that's visually what I'm looking for when I'm looking at a simple strategy entry. But then you'll see that as this retracement takes place, we're pulling away from the lower Bollinger Band, and the slope of the lower Bollinger Band changes significantly, right? It starts to flatten out. So instead of being at a nice 45-degree angle, maybe we're at a 15-degree angle or a 20-degree angle. So what we find is that with boomerang signals, the steeper the slope, so like a 45-degree angle or higher, would be an example for a strong boomerang entry. This one you see as a winner. This one you see as a winner. And this one happened to be a winner, but the angle was down. So if you're using this filter, you would have avoided this trade. It was a winner, but then you'd have 2 other trades that were winners. Actually, this was a winner too. So there are 3 signals where the upper band is angling up, and all 3 are winners. There are 2 signals in the US session where the band is flat, and of those 2 signals, one is a winner, one is a loser. So if you take all 5 trades, you have 4 wins, 5 losses. If you just focus on the trades with the angled slope, you have 3 wins, no losses. You're not going to have 100% winning percentage, but it's a perfect example about the winning percentage increases, but you have fewer trades. Now, Alan shared that the E-mini S&P is a boomerang signal right now, so let's use this as an example. Maybe on an 8-tick bar though. we could use it as an example either way. Yeah. Okay. Yeah, actually, let me do this. I'm just going to sign in to Infinity AT. Thanks, Alan. Since it's after the US session, I'm just gonna sign in. With demo. Oops. Alright, I'm going to bring up the platform. Oops, let me try that one more time. I actually trade from my other computer that I don't use for our club sessions. Otherwise, I would have this ready to go. Alright, so I'm just going to use a sim trade here as an example. Alright, so here we have, and thanks Alan for sharing this, because this is a nice, this is a really nice example. So step one, we need to see a strong trend based on our rules. We have MACD, bullish based on our rules, above the zero line, above the signal line. On this bar, RSI was above 70. We're tagging the upper band. Now we're getting a retracement. RSI is below 70. So we could place a buy order at 1987.75. So this is where we put our buy order. And if we move higher here on this bar, actually this bar we might already be in an 8-tick range. Let's see. The high of this bar is 1990, the low of this bar is 1988.25. So actually we can move one more tick. Like if we move down one more tick, then the next move lower would be where we'd open. That's why we have the order at 1987.75. If we happen to come all the way up here, take out this high, and trade one tick above this high, then we'd have to adjust our order. So we're adjusting our order based on the open of the next bar using an 8-tick range. And we could put our order in early as long as we know that RSI has dipped back below 70 in an uptrend or has dipped above 30 in a downtrend. So you don't have to wait for the bar to complete. And it's actually in your best interest when you see that RSI has lost confirmation. It's in your best interest to have orders in early because of the FIFO principle. Orders are filled first in, first out. So if you could get that order in the market early, then you have a better chance of getting a fill, especially on those times when you see that the market opens right where you want and then immediately turns in your favor. And ES especially, fill-wise, it makes sense to have those orders in early. Crude oil gives you some better fills, so you'll probably find that crude oil is a little easier to get filled in. So while we wait to see if this order is filled, let's go back and let's just review some of these some slope filters, and then I'll take a closer look at that. We'll see where we're at. So like in crude oil today, and this is actually another important, I think that whether or not you want to use the angle filter, the angle filter is a nice filter, but sometimes boomerangs are just working out great in a particular market. Like crude oil right now, we saw that with the examples that were given, crude oil had a pretty decent winning percentage this week just looking at basic signals. But like here on this 2-bar retracement, we see that the slope is still pretty strong. If you find that the slope has completely changed on a 2-bar retracement, then I think that would be a reason to skip a signal like this. Remember that the first bar retracement in this example isn't a true boomerang signal because RSI is still below 30 in a downtrend. This would be the entry, and if we find that the lower band is totally flattened out or is even angling up on that second bar retracing, then we probably have a scenario where we have a reversal in the market, not a retracement. But if we see that the slope of that band is still pretty strong, then that's generally a pretty good signal for that market. Oops. Okay, let's see if we can find some other examples where the slope comes into play. Actually, this stays pretty nice because do you see here? This is a perfect example. Do you see here that the trend is strong for most of the day and that the lower Bollinger Band is angling down, and during the day this boomerang signals a winner, this, let me put it in the right spot, this boomerang signals a winner, but then this boomerang signal, the lower band is flattened out. That to me is a sign that the market could be either reversing or giving us a bigger retracement as price pulls away from that lower band and the lower band flattens out. So you see with these three examples, the times when the lower band was still angling down, you had two winners. The example where the band was clearly pointing up, you had a loser. Here, the trend resumes. This one would have probably been a little questionable. It was a little flatter, but this one works out. It's still angling down. This one's great. I mean, this to me is like a picture-perfect boomerang. You have price tagging the lower Bollinger Band on the previous bar, nice steep slope. You have a RSI confirming. You have a retracement. The slope of the lower band is still strong. Just a beautiful boomerang. Here, you have the slope is pulling up a little bit, but is still down, and another boomerang winner. Here, you see the market starting to flatten out. You have the lower Bollinger Band angling up, and this boomerang would have been a loser. So it's a powerful filter. It's a powerful filter, and there is a degree of interpretation when it comes to the angle of the band. But what I recommend is that traders begin with the strategy just focusing on every signal. Get some practice focusing on the signal. Let me see if we can. ES is, with us being in lunch here, I don't know if we're going to be able to get a fill in the next couple of minutes. But this was a good example. And then once we were filled, if we did get filled at 1987.75, then we'd know where the next bar is going to open, either higher or lower as the bar is forming. We just adjust our profit target and our stop loss to show these values. So let's go back. I'm going to show another slide or two, and if we're close to getting filled, we'll keep an eye on this. If it looks like this could be a long one, we'll hold off. So, an example of the angle of the Bollinger Band. This was in crude oil, just some general performance numbers, just looking at a very basic boomerang signal with no filters, using a 14-tick bar a couple months back, and using the angle to filter out boomerang signals. And it's just, to me, a perfect example of what you will have in those two scenarios. So the angle of the Bollinger Band typically improves the winning percentage but reduces the number of trades. So here you have an example where, well, let's first look at just the general boomerang numbers. With the general boomerang numbers over the period that was tested, there was a $1,480 profit, 59% winning percentage, which is just in line with what we shoot for, 64 trades, and you're averaging $23.13 a trade, just purely taking signals, not using any filters, not paying attention to the slope of the band, just looking at boomerang signals. So, I mean, not bad for a very black and white entry, and not considering anything else. Now, looking at an angle that was at a 45-degree, or, you know, approximately, because there is a level of discretion there, but incorporating the slope in an uptrend or a downtrend, you see that there was a $1,320 profit, so a less total profit. You have a 63% winning percentage. So the winning percentage jumps up with incorporating the slope of the band. The profit per trade jumps up because you're taking fewer trades, but if it's a good filter, you're taking fewer trades, it will eliminate some winners, but it should eliminate more losers than it eliminates winners. And so here you see that the profit has jumped up to $34.74 a trade. The winning percentage is at 63%, and you have 38 trades instead of 64. So these numbers are in line with what I would expect when we start to incorporate filters. General signal with a boomerang strategy trade, you probably have a winning percentage around 55–60%. Just general signals, taking them. But then when you're incorporating the angle of the slope, you'll see that you typically see a winning percentage between 55 and 65%. If you're so focused on that slope, you might even see a winning percentage of 70%, but then you run into a problem where you don't have enough signals during the day or during the week or during the month. So even though the winning percentage might increase that way, your net profit is lower during that period because you just aren't getting as many trades. So, action items for you. Review the rules of the boomerang strategy. See if this is a strategy that you want to practice and trade, and you want to consider for your trading plan. It's a day trading strategy, and we find that it's easiest to apply with range bars. So see if it fits into your trading plan and if it's something for you. 2, practice it. Don't just take my word and don't just look at those numbers and start trading it live. Get comfortable with the idea, getting into trades, practicing managing exits. And then I skipped a step. It's supposed to be 3. But decide on whether or not you want to apply the angle filter. It's easier to not use the angle filter. There's no discretion. You have a signal, you could take it. And in a market like crude oil, even just taking the basic signals on a 14-tick bar would be pretty decent.